Hello everyone, thank you for joining us today and welcome to this educational presentation of Can Candlestick Patterns Really Help You Become a Consistent Trader? Well, today I'll show you how. I'll show you a great entry technique where I truly feel will increase your odds for consistency simply by applying this to your candlestick trading. Now, as we look in this picture right here, you see there are tons of different candlestick patterns. These are just a few of the most popular ones, anywhere from doji patterns to an evening star. The technique I'm going to be sharing with you today can virtually be applied to any or all of these techniques, but we'll just focus on one today, and I'll show you how simple it is to really be a consistent candlestick trader. So this promises to be a great presentation today. Welcome. My name is Steven Primo. I am the president and founder of Specialist Trading. If you're new to my weekly webinars, we are all about educating you as a trader. In fact, that's our sole purpose. That's our sole mission, simply to educate you. So we're a little bit different from other webinars you may have attended in the past where they promise to sell you a $10,000 system that never loses or some tremendous indicator that has worked going back 20 years. We don't believe in that, because when you apply trading that way, what you're really saying is, I don't know how to trade, so either tell me how to do it or do it for me. And that, in my opinion, is a recipe for disaster. Once you take yourself out of the game, once you stop becoming a part of the process, you're really on your road to being inconsistent. Now, the entire industry, trading industry, is built on that premise that all you have to do is simply follow a system or follow someone in a chat room or a trade room and you'll be successful. But if this really works so well, then why has it been estimated that upwards of 80% of all traders fail? It's because that really doesn't work. You should never try to mimic or copy what someone else is doing or just take some signals blindly. You should be a part of the process. That's why we supply our members around the world in over 110 countries and virtually every state in the United States with sound fundamental education. Sure, we have strategies and we provide signals for those strategies, but they're simply there to educate you because we feel everyone should be trading differently. So we provide all of our students around the world with a basic format, and then we work with you from there to fit it and mold it so that it meets your needs. So if you want to trade more aggressively, if you want to trade 10 or 20 times a day, we show you how to do that. If you want to trade only once a week or once a month, we show you how to do that as well. If you want to get in and out of trades rather quickly, we can show you how to do that. If you like to stay in for the long haul, try to get as much bang for your buck, well, we show you how to do that as well. Now, I've been trading for 41 years now. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name specialist trading. A specialist was just someone who specialized in making markets in stocks. So if you wanted to buy or sell a particular stock, you had to go to the trader who specialized in making a market in that particular equity. Now, I did that during the crash of 1987 and the bull market that followed. I left the floor in the mid-90s to manage money and to also trade my own account. And about 8 years ago, I teamed up with ProTrader Strategies, where all we do is simply educate our members around the world. So that's what our sole mission is. And you'll see today how much attention to detail and attention we give to educating you in today's free presentation. Now, before we begin, we are required by law to show you this, so please take a moment to view our disclaimer. I'm going to share with you a lot of performance results, a lot of different charts using this entry technique. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all the examples I'm about to share with you and display are strictly for educational purposes only. So, as you're taking a brief moment to view our disclaimer, I would also like to take this time to invite each and every one of you to follow us on Twitter if you haven't done so already. I post different information on a daily basis, anywhere from signals that our strategies have generated. In fact, I posted a couple of good ones today in all markets, forex, stocks, futures, Bitcoin, even Bitcoin. And also I post different bits of financial wisdom along the way that I've accumulated. So lots of great free information. Feel free to follow us on Twitter. Okay, so as I stated in the opening statements of this presentation, we're a little bit different from other webinars you may have attended, and that our only goal, our sole goal, is simply to teach you. Okay, as you can see here, my goal is not to force feed you signals. My goal is not to have you go to a chat room or a trading room and follow all the trades that I do on a daily basis. My goal is not to force feed you signals, it's simply to teach you how to trade. This is the only way you will become a consistent trader, in my opinion. It's often been said that a good mentor does not trade for you, he teaches you how to trade. So that's what my goal is, to teach you how to trade with a specialist edge. When I was struggling some 41 years ago, my mentors taught me the same concepts, and they taught me the exact same way that I teach all of my students around the world. So this is how I hope to turn your trading around, the same way it turned my trading around and sustained me for 41 years, okay? Now, since this is going to be conducted like a classroom, I want to take each and every one of your questions. We have a real good crowd here today, but if we stop at every question, we'll be here for a couple of hours, and I want to take all that much time up. So please wait to ask any questions at the end, okay? I know a lot of other presenters like to stop every time there's a question, but we'll be here far too long in the day if we stop every 5 seconds to answer a question. So if you have a question, oftentimes if you wait, it's answered in the very next slide. So please wait and write it down if you have to. The only questions I will answer are the most popular, and that is this being recorded? Yes, it is. We record all of our educational webinars, so if you have to leave early, or even if you're having technical issues, if you can't seem to hear or see everything clearly, oftentimes if you log off and then log back on, the problem will be resolved. But if you still can't resolve it, don't worry, we will send everyone a link to this recording, okay? So if you happen to join us, once again, please wait till the end of class to ask any questions. Okay, so let's begin. And the requirements for this method, remember, this is an entry technique I'm going to be sharing with you, but it's very simple. And you're going to see that the requirements are a little bit different from what you've usually seen in other webinars, where they'll give you an indicator, they'll tell you exactly what the rules of a strategy are. Well, we like to make things a little more conceptual, because the requirements for this method are, 1, you have to listen to the market. I know that's very difficult for some people. They don't even understand that concept. And 2, we simply apply structure, okay? Those are the only 2 things we have to do. In fact, trading is really simple. Those are the only jobs we have as a trader. Listen to the market, and then find out what it wants to do, and then apply some form of structure in the form of a strategy or a method or a technique, which I'm going to be sharing with you today. That's it. We don't have to look at the earnings. You can if you want to, but why overcomplicate things? We don't have to look at support and resistance. We don't have to look at Fibonacci or Elliott wave levels. We don't have to look at support and resistance or even institutions, what they're doing, or volume. I mean, trust me, I started trading 41 years ago using these exact same things, and they didn't work for me then, so they're not about to work now in terms of consistency. So why rely on things that aren't consistent? Sure, they'll work every once in a while, but we want things that can sustain you, not just a couple of months or maybe even a couple of years, but 20, 30, 40 years down the road. And for someone who's been trading for 41 years, I know what is consistent and I know what's not. And those things really show no consistency. So let me share with you what is consistent. When we say listen to the market, what do we mean? Well, we listen to the market in order to find the trend. In other words, we want to find out what the river wants to do. We want to find out which direction the river wants to go. All right? That's the trend, the river. We want to see which direction the current is. And in this particular technique I'm going to be sharing with you today, the way we find out the trend is by applying the PET D. You've heard me speak about this tool before. I first learned about this tool some 4 decades ago on the floor of the exchange. And what it is a tremendous tool for finding the direction of the trend. For example, here, we look at this chart in Aetna. It's safe to say that there's an uptrend right there, and obviously you'd want to buy into that uptrend, right? But then look what happens. So what if there were a tool not designed to pick a top at the bottom, because we know that there's no such thing as that, but something to help us get in early and get out early when the trend is about to change? Well, there is. It's the PET D, because the PET D is a color bar algorithm. If you see green bars, it means the trend is up. Red bars, the trend is down. Now, you wouldn't have to get into the trend late, right before it turned around. You could have gotten and known there was an uptrend somewhere around here and gotten out when you had 2 or 3 bars turn red well before it started to head down lower. So this is a great way to find out what the short-term trend is. And this is going to help us listen to the market. All we have to do is apply the PET D. All right? Now, we need to apply structure. So now we know which direction the river is going. Now we have to build our boat. Now we have to add an inner tube or some type of structure in order to go down the river with the current at our back, because we don't want to swim upstream. We want the current at our back. So what's the structure we're going to use to go down the river? we're going to add structure in order to enter the trend in the form of candlesticks. Remember, we talked about candlesticks. Now, candlesticks are a great way to trade. We know that the majority of traders apply and use candlesticks in some capacity or in some form, okay? It's my opinion that most traders use them incorrectly. Why do I say that? Because I was taught the same way you're probably taught. They're always used as some type of a top or bottom type of method, or another way of saying that is a reversal pattern. In other words, we look for a trend to be up, and then we look for some type of candlestick pattern at the top of that trend to tell us that the trend is reversing and that we're going lower. Or we look for a downward trend, and then we look for some type of candlestick pattern, regardless if it's a shooting star, hammer, regardless of what it is, to tell us that the trend is reversing and we're going back up. Well, see, we don't need that anymore because we have the PET-D to do that. The PET-D is a better trend defining tool than anything I've ever used in 41 years. So then what do we need the candlesticks for? Well, we need the candlesticks to trade in sync with the trend, because it's been my experience that the traditional use of candlesticks really holds no consistency. Sure, every once in a while you will find a great pattern, candlestick pattern, that picks a top or a bottom. But over time, they usually don't work very well. How do they work well? Well, let's start out with the engulfing pattern. This is what we're going to be talking about today. This is the simplest of all the patterns to identify, simplest to see. And remember, the pattern I'm going to be sharing with you today can be applied to all candlestick patterns, but the technique we want to focus on today, we'll just use engulfing. So here's what we want to say about candlestick patterns. The great truth is that candlestick patterns have a higher level of consistency if you trade them in sync with the trend. This goes against everything we've ever been taught. We've always been taught use candlesticks as a reversal pattern. But remember, I've been trading with candlesticks for 4 decades now. There isn't a lot of consistency using them that way. All right? Look at your own candlestick trading. How many times have you thought, well, this is signaling a bottom of a downtrend, and you buy and it keeps going lower and lower? Or how many times have you seen that this signals the top of an uptrend, you sell, and it keeps going higher and higher? You see, that's similar to gambling. We don't want to do that. We want the current at our back. Remember, we want to be in sync with the trend. So here's a way we're going to apply engulfing patterns in this particular technique. But remember, this can be virtually used with all candlestick patterns. We're only going to buy if the engulfing pattern, that's bar 2 of the engulfing bar, is colored green, okay? And that's it. So we look at the pattern right here. Here is a bullish engulfing bar, okay? This is a bullish engulfing bar pattern. It's a 2-bar pattern. And the way you define it is that bar number 2's range, and when we say range, we're talking about open to close. We're not talking about extreme high and low. We're talking about the open to close of bar number 2 engulfs the range of the open to close of bar number 1. That's all, okay? Now, usually in a bullish engulfing pattern, bar number 1 is down and bar number 2 is up. Well, in our capacity, we really don't care what the direction of bar number 1 is. Bar number 2 has to open and then close higher, but it really doesn't matter what the range or what direction the bar number 1 is taking. So it can be down or up. All we care is that the open to close range of bar number 2 engulfs the open to close range of bar number 1. That's a bullish engulfing pattern. And now in order to be in sync with the PET-D, we simply apply the PET-D, and we want to make sure that bar number 2 is colored green. So once we apply the PET-D, we see that the outline is green. So that's all we need to take the trade. There's nothing else. We don't have to look at, once again, earnings. We don't have to look if we're at the top or bottom of a trend. Makes no difference. Why overcomplicate your trading? This is all you need. Remember, I shared with you, I said trading candlesticks is really simple once you know how to do it. But most of us, myself included, when I first started, are trading incorrectly. All right, let's look at the opposite side of the coin, bearish engulfing patterns. We're only going to sell if the engulfing bar, that's bar number 2 of the pattern, is colored red by the PET-D. So let's just look and see what a bearish engulfing pattern is. It's a 2-bar pattern. Bar number 1 is usually an up day, but it doesn't have to be. What we're more concerned is bar number 2, which is a down day. And we're concerned with the open to close range of bar number 2, because where we open and close must engulf where bar number 1 opens and closes, okay? Remember, bar number 1 is usually an up day, but it doesn't matter. We don't care. A real engulfing pattern just means that bar number 2 engulfs the open to close range of bar number 1. Now, to add consistency, we want to apply the PET-D, and all we're interested in is if bar number 2 is colored red. So we apply the PET-D, and yes, it is. See, we don't care what bar number 1 is. We don't care what all the bars prior to bar number 1 were. It makes no difference. We're only looking at 2 bars. That's it. You don't have to overcomplicate things to become a consistent trader. So bar number 2 needs to be colored red. And then you have the okay to sell if you want to. This is not a system. This is not saying that you have to. This is just an entry technique. Where you decide to get out, where you decide to place your stop is up to you. We teach you those things in the course, but right now I'm just sharing with you a high probability place for entering. All right, so when we combine these 2 techniques, we create what we call our candlestick combo. It is one of our most consistent methods we have at specialist trading. Okay, the candlestick combo. When you combine candlesticks with the PET-D, we call it our candlestick combo. So let me show you some recent examples going back a couple of months to just past week to show you how well this works, okay? All right, so we look here at XLNX. Looking at this right off the bat, we say, okay, we've been going up. Now, conventional wisdom tells us to look for a bearish engulfing pattern. That means we want to look for some type of reversal. We're not interested in that. That's, there's no consistency. That's the way we're always taught, but there's no consistency. Just like the slot machines, every once in a while, that will work. But over time, you're really not going to see any money if you stay at the slot machines over time. They're giving you a win every once in a while, but over time, you're really going to walk away with no money. It's the same way with trying to trade candlesticks in the traditional sense. We just want to be in sync with the trend. So in order to find out what the trend is, we add the PET-D. And let's see what the PET-D is telling us. The PET-D is telling us we've been in an uptrend the entire time and remain in an uptrend. So if the current is at our back, we don't want to swim upstream. We want the current behind us, and we're going to go in sync with the trend. And what do we have here? We have a bullish engulfing pattern. Bar number 2's open to close range totally engulfs bar number 1's range, and bar number 2 is green. So that's giving us all signals it's okay to jump into here and go long if we'd like to, and you can see we went up a quick 6 points. Now, as we see later on in the chart, we're met with some red bars, okay? Well, now should we look for a buying pattern because we've been coming lower, right? So now we've been going lower. Traditional wisdom tells us to look for some type of a buy setup. But no, what do we have here? We have a bearish engulfing pattern. And bar number 2's open and close range is red, and it engulfs bar number 1's range. So that's a sell setup. So it's telling you, the market is telling you, not me, somebody in a chat room, and not some earnings report or some government, issued newsletter or something that's coming out with the economy, but the market. The only thing you should be listening to is telling you it wants to go lower. And another quick 6 points to the downside. You see, consistency is simple if you learn how to listen to the market. Then you just have to apply some structure. Let's look at TAP. All right, as we're going higher, we see a bearish engulfing pattern. Okay. Bar number 2's open and close range engulfs bar number 1's open and close range. Now we just have to confirm it with our candlestick combo with the PET-D. So we add the PET-D, and it's not a valid sell signal. Why? Because bar number 2 needs to be red. And even though it's a down day, the PET-D is coloring that down day green. That's just a down day in an uptrend. So we don't want to take that setup. So we wait a couple of days, and we see that the market never went down until this day. And then guess what? We have another bearish engulfing pattern, and in this case, bar number 2 is red. So now we have the confidence to take the trade, and 8 points in the next week. Let's look at KLIC. All right, here is the way most traders, myself included, I'm not leaving myself out. When I first started trading candlesticks 41 years ago, this is the way I used to trade. You see the market coming lower, and lo and behold, there's a bullish engulfing pattern. So you go, boy, this is a reversal pattern, right? I want to buy right here. This is the market telling me it wants to go higher. So I step in and buy. But until I was taught that you never want to go against the trend, you always want to be in sync with the trend, my mentor said, Steve, we have to apply the PET-D. The PET-D will tell you whether you should be buying that or not. And guess what? The PET-D outlined the up bar red. So the market's telling you don't buy this. Sure, every once in a while it may go up, but the odds for you over time having success with that are pretty low. And it was a good idea. I didn't go long. All right. So see, this is what I mean. It is much better in terms of having consistency if you trade in sync with the trend. So since the market was going lower, we're looking for engulfing, or not engulfing patterns, but any candlestick pattern that has a downward bias. So the market went lower. And now it started to change trend, and the PET-D changed with it. And as it goes up, the bars turn green. And we're met with two bullish engulfing patterns. One here. Remember, all we need is for bar number 2 to be green, and another one here. So what is the market telling us? It's telling us that this is not just a pullback. This is a sign that it most likely wants to go higher. So you would have bypassed this trade, maybe taken one or two of these, and 13 points to the upside. And if you missed those first two, the market gave you another chance to go long right here. All right, let's look at MU. All right, this has been in the news lately. Now, as we see coming into March here, we were going in an upward direction. All right. Traditional wisdom would say now we have to look for a bearish engulfing pattern. But no, we're not, because all the bars are green. We're looking for bullish patterns. And here's a bullish engulfing pattern. Bar number 2's open to close range engulfs bar number 1, and the outline is green. So this is the market, not me. I don't make these rules up. This is the market telling you it wants to go higher. If you're thinking of trading, the odds are in your favor if you go long. And had you done that, you would have been able to potentially accumulate anywhere upwards of 18 points in the next week or so. Now remember, in today's class, we're just sharing with you this high probability entry technique. We're not talking about exits. We're not talking about where to place your stop. You had 18 potential points to take advantage of. If you wanted to only take 2 points, you could have. If you wanted to, place your stop at a certain level, that's up to you. Now, we teach you these things in the courses, but that's a full-fledged course. And I'm sorry, I can't divulge all of the rules because it wouldn't be fair to the person that purchased our course. But I'm sharing with you the high probability entry point here. And if you've been trading for some while, I'm sure you can imagine where you'd like to place your stop. I'm sure you'd want to maybe double that risk to have a 1 to 2 risk-reward ratio. So it would be that simple. It's up to you how to decide. And if you wanted to trade options, you could do that. We do not tell our students how to trade. That's not our goal. Remember, our goal is to teach you how to trade. And then you can apply it in any form or structure you'd like. If you want to trade options, that's fine. If you want to take 2 or 3 points, that's fine. If you want to go for 18 or 20 points, it's up to you. We just show you how to do that. It's up to you to decide which format you want. All right, here's a candlestick combo trade in progress. I'm going to show you how this happened at the beginning of the year and how you could have taken advantage of this. This was in Amazon. All right, we realize expensive stock, but just look at this as an educational experience. We realize that not everyone can trade $1,100, $1,200 stock at the time. Even purchasing the options would have been very difficult, but just to show you how this works. Now, looking at this in the month of December, we see that the market has been going higher, but maybe a little, sideways action, and we look for that engulfing pattern, and we actually have 3. We have a bullish engulfing pattern here, a bearish engulfing here, and then a bullish engulfing. So like, which ones should we have taken? How would you know? Are we going to be going lower? Are we going higher? No one knows. So the way to help is to apply the PET-D, because the PET-D will confirm. It's not going to guarantee. Remember, nothing is guaranteed. We don't promise to have something that works 200% of the time. We don't believe in that. Sure, you will have losses from time to time. We're just trying to increase your odds for consistency. So the way we do that is by trading in sync with the PET-D. So once we apply the PET-D, we see here that this bullish engulfing pattern and this bullish engulfing pattern both had bar number 2's colored green. In order for this to be a valid selling spot here, this bearish engulfing pattern would have had to have been red on bar number 2. And what color is it? It's green. So that's not confirming in any way, shape, or form to sell. It's telling you you should be buying Amazon. So had you done that, well, look what happened to the stock. The stock went straight up coming into January and into February. Now, we ran into some difficulty here. So is it topping out? Is it going to come all the way to lower? Well, what's the market telling us? Forget about what earnings may be happening. Forget about what's going on economically or politically. It doesn't matter. What is the stock telling you? Well, if you look right here, it's telling you it wants to go higher. We have 2 more confirmed bullish engulfing patterns. Do we know when it's going to go or how high? No. And there's a lot of volatility here, so maybe you want to be on the sidelines. But just for now, we know that we have a bullish bias, even though a couple of the bars had turned red. So what happened coming into March? Well, as you can see here, it did go higher. And if you did want to take advantage of this large volatility trades here, well, guess what? Amazon gave you two signals to get in using engulfing patterns right here and then again right here. See, the market is always giving you opportunities to jump on board. It's always saying, come along for the ride. You can make money. Most of us do the opposite, though. We always want to fight it. We've always been trained to say, well, it's gone up too much. The institutions are selling. It's right up to that level where it's sold before. It's at a resistance point, so we have to sell. We're always trying to fight what the market wants to do rather than go along with it. So the market was telling us at this point right here in mid-February, it wanted to go higher, and it gave us a couple of opportunities in the form of structure of engulfing patterns to come on board. So there you have it. You could have taken advantage of that. And then look what happened coming into April. Well, we started to head lower. And is this another buying opportunity? Well, we still have the majority of green bars, but we have some red bars splashed here. And then guess what, though? A bearish engulfing pattern. And bar number 2 is colored red. This was at the beginning of April last month. So what is that telling us? Is that telling us that it wants to go higher? No. This is the first signal the market has given us that it wants to go lower. And in the first or second week of April, we went down roughly about 150 points. So you see, the market is always telling you what it wants to do. The only trouble is we don't learn how to listen to the market. We've always learned how to listen to some guy on TV or some guy in a chat room or some indicator or some institution, but we never really listen to the chart in front of us. Well, that's our goal at Pro Trader Strategies and Specialist Trading, to teach you how to listen to the market. All right, let's look at another example here. UPS, once again, coming into the beginning of the year, we're basically going sideways, but we have a bullish engulfing pattern. Is it confirmed by the PET-D? Yes, it is. Bar number 2 is outlined green. So UPS is saying it's okay to buy. You say, but how can we buy this? I mean, we've been going sideways. It's okay. Market is saying, I want to go higher. And it went up 16 points. Now, when we say our methods are consistent, what we mean by consistent is that, is it going to work 100% of the time? No. It means that you will have losses from time to time. That's perfectly normal. Consistency means you have a method or a technique that is able to recoup those losses rather quickly sometimes, hopefully sooner than later. So consistency is a 2-step forward, 1-step back approach. 2-step forward is a consistency in profitable trades. The 1-step back is a loss you will have every once in a while. It's okay. As long as they're small, minimal losses, you keep them to a minimum and you jump back on board to recoup those losses. Now, as we see right here, the bars still remain green and we have another bullish engulfing pattern. So let's say you captured and took 8 points out of this big run. Okay, and you're thinking, boy, this thing doesn't want to go down. It wants to go higher, and here's another bullish engulfing. So I buy, and then it goes straight down the next day. And you think, well, it hasn't hit my stop yet. I'll still hold on. But this is where you have to be vigilant. This is where we teach you in the course that there's always a setup being generated. You just have to maintain to learn how to listen to the market, because this setup now switched course. It's the market giving you a bearish engulfing pattern. And it is confirmed by the PET-D. Bar number 2 is confirming. It's all red, and it's engulfing bar number 1. So you could do a number of things here. You could exit your long position and say, I'm just going to wait on the sidelines and see what happens. You could exit your long and go short, okay? Or you could at least move your stop up and say, well, I'm still going to stay long and wait and see if I'm stopped out and take a small minimal loss. The best thing, as we see in hindsight, would have been to take this trade, because look what happened in the next month. Okay. Now, did we know that UPS was going to fall out of bed and come down close to 30 points? No. All we know is that the market was telling us in advance it wanted to go lower. That's all you need to know. So we want to be in sync with the market. We never want to fight the market. The market is your best friend. Why would you want to fight your best friend? The market is always giving you opportunities to be consistent. So why would you want to fight that? If the market is telling you it wants to go lower, then you want to switch and sell, or at least be on the sidelines at the very least, okay? So you could have recouped that loss and then had potentially the option to make close upwards of 27 points. Let's look at Pepsi PEP. Okay, this is just a couple of weeks ago in April. We're going sideways, but we have two bearish engulfing patterns here. Should we have taken these, or are we just kind of building a base before we go higher? Well, let's click on the PET-D. And by the way, this is our new PTS Primo charting platform. I designed this with proprietary strategies, where all you have to do is click the PET-D. It's right up here in our strategy tab. It's that easy. There's nothing you have to figure out, or nothing you have to go into some back data issue and make sure that it's properly installed. It's all one click away. Once you click on the PET-D here, you see that the colors automatically change, and these are both confirmed. Bar number 2 is red. So Pepsi is telling us, even though we've been going sideways for the last couple of weeks, it wants to go lower. So these are high probability points of entry. And the stock fell 12 points coming in to the beginning of May, okay, this last week. LRCX, someone could say, Steve, how can I make a decision based off of 5 or 6 bars? Well, that's all you need. You only really need 2, actually, because we have a bearish engulfing pattern, and we click on the PET-D, and it's confirmed. Bar number 2 is red. So that's all you really need to know. You don't need to know anything else. There's no reason to overcomplicate your trading. And the stock goes down 40 points. All right. Now, it firms up. It starts to turn green. And as it firms up, we have another bullish engulfing pattern here. And another 40 points. So the market's always telling you what direction it wants to go. Our job is just simply to listen to it so that we know what it wants to do and then apply some structure. Facebook, okay, as we can see here, I think this is Facebook, yeah, we're basically going up, going back down, and then going back up again, and guess what? We have a bullish engulfing pattern. So this is the market telling us it wants to go higher, right? Well, let's add the PET-D. Yes, it does. It wants to go higher. So we buy, and it goes up a little bit. Okay, we're doing all right. We're not really making any money. We're not losing anything. But now what do we have? Well, we have a bearish engulfing pattern. Bar number 2's open to close range engulfs bar number 1. It does not matter what direction bar number 1 is going. It makes no difference. So this is a valid setup coming from the market and confirmed by the PET-D that it wants to go lower. So once again, you could lick your wounds and take your loss and exit, or you could exit and go short, which would have been the better thing to do, because we all know that Facebook all of a sudden had some difficulty in March going lower. There was a lot of terrible news going out with Facebook, stuff going out about the company and about what it did in terms of data issues. Guess what? Well before it fell out of bed, the market was telling us it wanted to go lower. Let's look at CTSX. We have 2 signals here, a bearish engulfing pattern and a bullish engulfing pattern. Which one should we have taken? Remember, a bearish engulfing pattern needs bar number 2 to be red. A bullish needs bar number 2 to be green. So we click on the PET-D, and guess what? They're both valid. So once again, here is a great example of consistency. You would have taken this, and you would have had 3 or 4 days of negative activity, but then you were followed by a bullish engulfing pattern. So you once again would have to cover your short, lick your wounds, take a small loss, and probably in hindsight would have been the best thing to jump on board the opposite direction, because CTSX went up 14 points coming into May. Now here's an example of CAH. As we can see here, we have more data here to get an idea of. We were going higher, then we went lower. So this is where we want traditionally to look for a bottom, right? Because candlesticks are a reversal pattern. So we're looking for some type of doji, we're looking for some type of bullish or bearish engulfing, bullish engulfing pattern. I'm getting confused with all the different ones, or an evening star, something to tell us that we are making some type of bottom. And what do we have? Well, we have a bearish engulfing pattern, a bullish engulfing pattern, and another bearish engulfing pattern. So what are we supposed to do? Well, we apply the PET-D, and both the bearish engulfing patterns were confirmed, but the bullish was outlined red. Even though it was an up day, it was outlined red. So all that means is that we closed up on the day. Does that mean the trend is up? No, we just closed up in an overall downtrend. So this does not give us any action to take here, but we should be looking from a shorter's perspective, because the stock, it took a while, but eventually fell 12 points, and there was a very nice gap down in the first week of May. Now, if we look at ABMD, three more examples here of consistency. We have a bullish engulfing, and we went up pretty well, then met by a bearish engulfing, and then by another bullish engulfing. Let's see what the PET-D said. Well, the PET-D confirmed all of these. So you would have taken this trade and made some good money, and then somewhere along the way, you would have used one of our exiting techniques or your own, whatever you'd like. You would have probably exited and then maybe gone short on this bearish engulfing, and it didn't work out that well. And once you're met with the bullish engulfing, you exit that and go long. So you have a small minor loss, but that's okay because ultimately look where you went, okay? Had you just taken the very first signal, you could have worked with that, 90 points generated that you could have potentially captured. And let's look at triple L. The market is going somewhat sideways to higher. It's met by a bearish engulfing pattern, okay? This was at the end of April. And we apply the PET-D, and we see all the bars were green, but we're not interested in that. The only bar we're concerned about is the color of bar number 2. It engulfs bar number 1, but the color must be red, and it was. So that's the PET-D, the finely tuned directional tool telling us that the trend is now down. But even though we closed down much lower, this is the time to get in because the market continued to go down 29 points after that, coming into the first week of May. Now, I know a lot of you will say, well, Steve, I trade higher time frames. I don't trade daily bars. I like to trade swing charts and weekly bars or even monthly bars. Okay, let's look at a weekly chart of the spiders coming into the beginning of the year when the market was going straight up. Someone looking at this would say, gosh, I wish I would have known we were going up. Well, all we had to do was apply the PET-D. And look how long the PET-D has been green. Okay, sure, we had one red, but remember, we need consecutive bars of red to tell us that we've changed trends. So if the bars are consistently green, we want to find some type of structure in that uptrend. Well, we had two buy signals, one here and one here. This one was in July, just about a year ago, and here was another one in September, both to go long. So there's never any news or any fundamental reason to keep you out of the market. The market was telling you it wanted to go higher. All you had to do was apply some structure. And even though it was only 15 points in the spiders, that represented hundreds, if not thousands of points in the Dow Jones Industrial Average. We can do the same thing with an actual stock. Here's a weekly chart of GE. Obviously, in hindsight, this has been going straight down, right? But how could we have known well up in advance, like say around here, to get out or to know we were in a downtrend prior to the strong downward move? Well, all you have to do is click on the PET-D, and it automatically changes the colors of the bars. You see the consecutive red bars here? This is the market telling you it wants to go lower well before it fell out of bed, all right? So all we need to know is to add some structure because we already know which direction the river wants to go. Now we have to build our inner tube or get some type of a raft in order to go down with the current at our back. And if we're just using the one candlestick pattern we're talking about today, engulfing patterns, well, guess what? Look at all the chances the market gave you to go short. Once again, the market is always giving you opportunities to go along with it. Usually, we're not listening to the market. We're always listening to some guy in a chat room, some $10,000 system, some know-it-all on TV, or some guy in a webinar. But trust me, I don't at all ever tell people how to trade. I teach people what to look for and what to listen. It's up to you to decide by listening to the market. Had you used any one of these, you could have captured potentially upwards of 17 points to the downside. At the very least, if you were long this stock in your portfolio, you would have sold it somewhere around here because look at all the consecutive red bars. Now, lastly, people say, well, does this work in the face of news? Because what if a news event comes out? You're usually going to be caught off guard, right? Well, remember, nothing works 100% of the time. You will have losses from time to time. But it's been my experience in my 41 years of applying these techniques that most of the time, the market tells you what it wants to do in advance of news. You just have to learn how to listen to it. For example, this past week, this was on May 2nd, okay? Snap shares, Yahoo Finance reported Snap shares in free fall, okay? The shares of Snap Incorporated, SNAP, have fallen to their lowest level ever on a disastrous quarterly earnings report, confirming investors' fears about a poorly received app redesign in the firm's weakening relationship with advisors. The stock closed down a whopping 21.9%, just about 22% on Wednesday, okay? So the way most traders trade, the way we've always been taught, is to listen to the news, because the news tells you what the stock's going to do. So let's say you were an investor in this. It was the darling of the IPOs this past year, and you're getting killed in this thing. It's not going up at all. And you say, boy, this is really bad news. I've got to exit. So if we look at the chart, well, here's where you're exiting, when the big gap down day right here. This was on the 2nd of May. All right. Once again, this is the way most traders trade. If you learn how to listen to the market, not guaranteed, but a lot of the times tells you in advance what it wants to do. Because right here we have a bearish engulfing pattern. Okay. This is a bearish engulfing pattern in advance of that news, but we want to confirm it. What was the PET D telling us? Well, all you have to do is click on PET D, and as you can see, bar number 2 was colored red, confirming that you should be selling this. And the stock quickly fell 22%, lost 22% of its value in 1 week. Now, was the market telling you in advance? Sure, it gave you an advance warning of this well before the news came out. So this is what we mean. When you learn how to listen to the market, there's really nothing you have to rely on anymore. You don't have to rely on trying to figure out what news events are. You don't have to pay and spend some news service or some chat room service and copying what the guy does in his trading account. You learn how to listen to the market, and you can make your own decisions. For the very first time, you'll be in charge of your own trading destiny. That's the only way I have found in 41 years how one becomes a consistent trader. So ask yourself, do you think this method, this technique could have helped your trading this past year? I've just shown you tons of examples. And remember, this can be applied to virtually any market at a time frame. We had a stock bias today, but you can apply this. I use this with currency pairs as well as futures markets. You can also apply it with Bitcoin. It makes no difference. We have traders and members who use this on commodities. Okay, so this is how easy it is to transfer onto any market, any time frame, any direction. So, extremely important points to remember. This is just a technique. This is not a complete strategy. I know you're asking, well, where exactly are you going to be entering? We didn't talk about entry signals, okay? We also didn't discuss stop placement. This is also a very important piece of the puzzle. We didn't talk about where you're going to be exiting, all right? Now, some of the examples we showed had 20, 30, 40, even 90 potential points you could have been captured. We're not expecting everyone to say they got out with a 90-point gain. Maybe you only took 2 points. It's up to you, but we didn't talk about that. And then we didn't talk about money management. Extremely important. How many shares, how many contracts are you going to be trading, okay? So these are all extremely important pieces of the puzzle. Remember, all we talked about today was just recognizing a high probability entry point and learning how to listen to the market, and then how to apply structure. Now, for all the attendees today, we have a special discount. We're going to be offering you what we call our Candlestick Combo Special. It's strategy number 5 along with the PET D tool. You're going to get instant course access. This is an online course, upwards of 20 videos, and in the course, we give you all of the different entry points, all the different exits, and all the different stop placement so that you can decide for yourself where you like to get in. In other words, if you don't mind taking on a lot of risk, well, then you can take a stop placement that has more risk, so it'll keep you in the trade longer. If you're the type of trader that wants to get in and out quickly, we show you exit points that you can take a point or two and get out and move on to the next setup. Or if you're like the type of trader that wants to stay in for as long as possible, we show you different stop placements where you can ride the trade all the way, okay? We also supply you with educational signal alerts. This means the up and down arrows are automatically generated on your charting platform when a signal is generated, okay? Comes with the PET D, and the PET D also includes 4 different trading techniques, completely different from what I just shared with you today, all right? Now this includes both add-ons. So in other words, let's say you have a trade station. We will provide you with the add-on for that so that you will automatically generate the different colors for the PET D as well as the up and down arrows. Now this works for TradeStation, Metastock, MT4, Sierra Charts, NinjaTrader. You can apply it with Thinkorswim also with a couple of different edits and alterations, but it can work with that if you use Thinkorswim. And there's a host of different other platforms. Now, in my opinion, it's much better to use it on what we just shared with you today. Everything was on our platform, our PTS Primo charting platform. Now, the attendee discount today is a one-time fee of $14.95 plus $97 per month. This usually runs close to $3,000. And if you'd like, you can purchase both courses with no lease for $29.95, okay? But if you'd like to lease it on a per month basis, it's a one-time payment of $14.95 and then $97 per month. Now, we're also going to throw in our platform to make it simple for you. We're going to give you 6 months of the platform. This usually runs close to $600, 6 months of the platform. But guess what? We're not going to charge you $600. In fact, we're not even going to charge you anything. We're going to throw in 6 months for free. So if you sign up today, you're going to get 6 months of the platform, which automatically generates the up and down arrows, automatically generates the PET colors, where that there's nothing you need to look for. Okay, there's nothing you need to upload, nothing you need to make sure that it works on your platform. It's automatically there for you. So you have everything included in our new PTS charting platform. All right, 6 months entirely free. Now, included in this are obviously strategy number 5, along with the PET. You're also going to get a proprietary buy and sell line. This is a great tool that tells you whether you should be looking for the overall trend as an uptrend or the overall trend as a downtrend. We're going to throw in 2 other techniques for entry, which are called our steps course. They automatically provide you with high probability entry points for any technique you're using. This includes over 90 technical indicators that you can apply and work with. But we also supply you with Bloomberg TV. So if you like to listen to fundamental news, even though it's not required, if you want to know what the earnings are, if you want to know what the economic news is, we have free Bloomberg TV. We have a media page where it automatically comes on your screen and you can be watching that live. And included is personalized tech support. So this is a great offer for free. You're getting all of these things included free, 6 months on our platform. All the samples and the displays you saw of the chart snapshots were generated using the PTS charting platform that we have devised together, PTS Pro Trader Strategies and myself. Now, guess what? We're not stopping there. We're also going to throw in a bonus. Included with your 6 months is our scanner. We have formulated a great scanner. We make it so simple to scan on a nightly basis for signals for the next day. For example, let's say you're looking at strategy number 5 on your PTS Primo charting platform. Once you click on the strategy 5 tab in the upper strategy tab center, you'll see a drop-down window appear like this. You simply click on scan and this menu will appear. Now you can have any list of stocks, futures, currency pairs, top ETFs, anything you're interested in appear once you click them on, and then all you have to do is click on PET and strategy 5, then click on scan, and you will see the signals automatically generated for the next day. It's that simple. This whole process probably takes you less than 60 seconds to do on a nightly basis. Now, let me show you, if we had had this presentation a month ago, let me show you what you would have seen if you had scanned the night before. Because as you look at SHAK, on the 25th, had you run a scan that night, April 25th, which was really just a couple of weeks ago, you would have seen that a buy signal was generated. Now the stock seems it's doing nothing, and you would ask yourself, well, how can I go long this? But you know the rules to strategy 5. We teach you all the rules, and once you apply the PET you would simply click on PET and you see that even though it looks like we're going sideways, what are the majority of colors of the bars? They're green. So the market's telling you it wants to go higher, and you've added some structure that is confirmed. So this is telling you this stock is going to go up. Now, looking at this, you have no indication that this stock wanted to go up, but guess what? It gained 16 points in the following week. I assume it was off of some good earnings or some news announcement. Did we know what that news announcement was, or what the earnings were going to be, or what the numbers were going to be? Absolutely not. We don't require you to follow that. Why? Because the market most of the time tells you in advance what it wants to do. So that's what we listen to. We listen to the market, we teach you how to listen to the market, and we apply it on our platform, which teaches you how to do that really simply. And it's all right there. So this would have been something you could have scanned for, and coming into this past week in May, had potentially 16 points to capture. Trust me, a year from today, you will have wished you became a member of this course. I just shared with you tons of examples going back the last quarter, all right? We're already into the first quarter of the year. You don't want to be here a year from today having me give the same presentation with new examples in all markets, different time frames, and you're sitting there going, boy, I wish I would have bought that. I think I'll buy it and have the price higher because it's most likely going to be higher next year. So the best thing is to take advantage of this great offer we have right now. Okay, remember, this is our candlestick combo. We're throwing in 6 months of the PTS Primo Charting Platform free, which includes the bonus scanner. Okay, that would usually be an extra $600. It's a one-time fee, less than $1,500, and only $97 per month after that. Now, should you want to buy it for good, not have to worry about a lease, it's only one-time fee of $29.95. Okay, this is a great offer. Usually, this entire deal would run you upwards of $5,000. Okay, but we're really giving you a great way to get on board for this upcoming remaining portion of the year. Here's how to take advantage of this. Contact my sister site, Pro Trader Strategies. I developed the platform with them. They handle all of our discounts and all of our technical support. You can email them at the email address in front of you, or call them directly if you'd like to get that discounted price with a lease and a monthly payment. Now, call them at 310-598-6677. Now, that link you see at the very bottom is the sign-up page, and you'll get more information on that page. And that's not a live link, but if you look on the chat box on the far right-hand corner, they have generated a live link there, so that will take you to the info page and the sign-up page, all right? I'm going to leave all this information up here so that you can take advantage of it. I would strongly suggest you contacting Pro Trader Strategies. There's absolutely no obligation. You can call them with more questions. I'm going to answer your questions right now, but any questions that you may have that are of more of a tech support or talking about actual platforms, I would contact them and they can answer your questions better than I can, okay? So there's no obligation at all, and that's the phone number right there in front of you. Now I'm going to open up the question and answer box and see we have a few questions here. First one, is the presentation being recorded? Yes, it is. So don't worry, we will send each and every one of you a link to this recording. But one thing I just have to caution you on is that this deal that we have today is for a limited time only. I feel it's only going to be going on for the next 2 or 3 days. So I would, not sit on it. If you're really interested, sure, watch the video again and see if it's right for you, but don't wait a week or two to make your decision, because it may go back up to the full $5,000 price again. And remember, we're discounting it down to $14.95 and only $97 per month after that, okay? So yes, we will supply you with a link. People are asking, what exactly is the PET-D? That's a good question. The PET-D is a tool I was introduced to on the floor some 4 decades ago. And at the time, we used to call it the formula, because there was a specific formula we had to calculate. Now, it was rather cumbersome. It's not really complicated, it's just cumbersome. So we couldn't apply it other than using it on daily bars, because by the time you applied it to one bar, you had to apply it to the next, because that bar closed and you had to start working on the calculations for the next. So we couldn't be trading 5-minute bars with it. But because of high-speed computers and programmers now, we're able to color code it and make it an algorithm where we keep it in-house. In other words, we're keeping the rules in-house. It's a proprietary tool. But the secret to the PET-D, what I tell all my students and all our potential customers, is that the secret is not in knowing what the formula is. The secret is knowing in how to actually apply it correctly to your trading. In other words, I could tell everyone how to use this on your own, apply it, and you would know the formula behind the PET-D. And I can almost guarantee that each and every one of you would lose money. And the reason is because you would focus too much on trying to figure out the formula and edit it and switch it, make it faster or slower. And you'd most likely lose money, because the real essence, the real secret to the PET-D is knowing and how to apply it. Now, I just shared you one of the ways in which to apply it today, which is in a candlestick pattern, to use it that the last candlestick in the pattern is colored in the direction of the trend. Okay, that's just one of the different ways. In the PET-D course, which you will be getting in the candlestick combo, we have 4 different techniques on how to use it. You can use it for a stop placement technique. You can use it for staying in trades longer. There's 1,000,001 ways to apply the PET-D, and we show you how to do that in the courses, okay? So that's the real secret of the PET-D. I hope that answers your question. And that's why we want to keep it in-house as a proprietary tool for right now, okay? Sandrine says, well, what exactly does the PET-D stand for? Remember, when I first learned this tool 41 years ago, it was just called the formula. But we couldn't just, once I teamed up with Pro Trader Strategies almost a decade ago, we couldn't just say, well, let's, teach everyone the formula. It didn't sound very right. So we gave it an acronym. The PET-D stands for the Primo Early Trend Detector. Okay, that's all it is. It's an early trend detector, because its most basic form is as a directional tool. Okay, that's the best way to apply it. Okay. Mercy asks, hi Mercy, when you use the higher time frame to invest, what time frame would you use to enter the market? Well, Mercy, we always tell our students the same standard answer to that question, which is the best time frame is the one that makes you feel the most comfortable. In other words, remember, our goal is not to trade for you and tell you what the perfect time frame is or the perfect market. That would be doing you a disservice, because once again, I would be doing what 99% of the financial community does, is telling you exactly how to trade. I would be systematizing it too much. And we don't do that. We don't teach nor do we trade systems. We just provide you with education. And then we work with you so that you can decide, well, what the best time frame is. Our basic suggestion is just to say, trade one time frame at a time. In other words, if you feel comfortable trading a weekly bar, if you feel comfortable trading a tick chart, that's fine. But there's no reason to look at another time frame to confirm what you're doing on that time frame. Now, you can if you want to, because once again, our philosophy is not to tell you how to trade, but just to give you highly consistent methods. But there's no requirement to use more than one time frame at a time. So in other words, if I'm trading a 5-minute chart, that's the only thing I'm concerned with. The signal that is generated on the 5-minute chart. I don't care what the hourly chart is doing. I don't care what the daily or weekly are doing. It makes absolutely no difference to me. And I've been trading that way for 4 decades. If I'm trading a daily or a weekly chart, I only take the signal on that one chart. I don't care what the lower time frame is doing. I don't care what the higher time frame is doing. Now, if you want to do that, you're more than welcome to apply that to your trading, but it is in no way required. So it's up to you to decide what time frame. We have students that say, oh, the weekly is the best time frame to trade. That is the best. And I have other students that say, no, the weekly is not the best. The dailies are the best. That's the best time frame. Is one right and the other one wrong? No, they're both right, because whatever makes you feel comfortable is the best time frame. Everyone trades differently. Everyone has different risk parameters. Everyone has a different account size. So a method may work better on one time frame than it does on the other because of your entry, because of your risk. Okay? So there's no one right or wrong answer. Byron says, I came in 15 minutes late. Is there a recording? Yes, there is, Byron. We will furnish you with a recording, okay? Let's see. Robert is saying, what is the options and price to have the charts beyond 6 months? Oh, good question, Robert. I believe beyond 6 months, now this was something more for Pro Trader Strategies, since they handle all of the platform pricing. But I believe it would be $97 per month. But because you own the combo, they're always open to giving you discounts and deals. So I would call them up and ask them about any type of extended payment plans or discounts because you had purchased the course in its entirety. There's a lot of different ways to do that. But Pro Trader Strategies is a great company. They're always willing to work with you and to give you a great deal so that you can become a member of our courses. Remember, we're trying to teach you, and we're showing you in good faith through our free webinars and by giving you something to work with. Now, obviously, what I shared with you today, you can use on your own. You don't need to become a member of the course. You could apply this now and just say, well, I don't need the PET-D. I think we're in an uptrend, so I'll look for a bullish engulfing pattern or some type of candlestick pattern that says we're going to go higher. And sure, you could do that. You'd have a moderate level of success with that, in my opinion, but you'll have a higher level of consistency with the PET-D. So why just try to do it halfway? Try and go for as much consistency as possible, and you'll get that with the PET-D, okay? Terry asks, do you still use the 50-period simple moving average with this system? Well, yes, you do. You can, but once again, we have traders who like to use the 50-period along with the PET-D, myself included. I do that because the 50-period will tell you the overall trend without getting too much in detail. But we also have students that also just like to use the PET-D. So once again, what is the right answer? The right answer is the one that makes you feel the most comfortable. So these are not systems. A system requires each and every one of the students and members to trade the same way each and every time, have the same set of rules. We don't believe in that. We don't believe in systems. We believe in supplying you with sound fundamental education and highly consistent methods. So if you want to alter it to meet your needs, that's fine. You can apply the 50 or say, no, I don't need the 50. I'm only going to use the PET-D. That's fine. Remember, what makes you feel comfortable is how you will become consistent. Trust me, for someone who's been doing this for 4 decades, it is the trader who makes their own decisions that is the consistent trader, not someone who mimics someone in a chat room or a trading room, not someone who waits for the news events to come out to take his cue on what to do, and not someone who listens to someone in a webinar telling them what to buy and sell. That's not how you become a consistent trader. That's the way I tried to trade. That's the way I was taught 41 years ago, and it didn't work for me. My first year, I struggled tremendously. Now, many of you may be struggling yourselves, or many of you may be just treading water. Well, take it from someone who's been there. The only thing that turned my trading around is trading the exact same way I'm teaching you in these webinars and in the courses, by finding your own way and making your own decisions. I truly believe that. Anything else is a recipe for disaster, okay? So as we conclude here, once again, I would suggest, strongly suggest actually, contacting ProTrader Strategies, talking to one of their many trading consultants. They're manning the phones right now. There's absolutely no obligation. And asking them more questions about any platform that you're concerned with, or maybe another discount because you possibly want to stay in longer. Maybe instead of having the platform for 6 months, you're willing to sign on for a year or two. Can they give you a deal? I'm sure they'd be happy and more than willing to work with you, okay? And contact them right away before this deal goes by the wayside, because next week we'll be talking about an entirely different method, an entirely different special, okay? In conclusion, I hope you got something out of this. I hope you saw the attention to detail we give and how much we really want to focus on teaching you as traders, because once again, that is our goal, simply to teach you how to become consistent traders. I really wish you all the best of luck. Thank you so much. Give ProTrader Strategies a call. And as you take one last look at our disclaimer here, I look forward to all of you becoming students of mine in the Candlestick Combo course, okay? Thank you so much for attending. We'll see you next time. Bye-bye.